This holiday season, we're helping you catch up on all your favorite Freightwaves TV shows. You can now watch the latest freight news, market insights, and in-depth discussions on your preferred streaming platform. As our gift to you, if you purchase a Freightwaves Live Atlanta ticket from now through December 18th, you'll receive a free Apple TV 4K. Download the Freightwaves TV app today and you'll see freight has never looked this good.
Hi, and welcome to this Wednesday edition of Freightwaves Now. We have a full lineup for you today. We have Seth Holm giving us some insights for the shippers, Luke Falasca bringing us some insights for the brokers, but first, Zach Strickland giving us a carrier update sponsored by PowerFleet.
Welcome to your carrier update, sponsored by PowerFleet. So today I wanted to dive into reefer volumes in the United States. Most people don't think about reefer volume in the colder months of December. However, we are starting to see reefer demand exceed last year's demand at this point in time. December, typically not a huge month for reefer, but right now we are exceeding reefer demand by about 5% year over year, according to our outbound reefer demand index. So diving into the nation, we see that the United States overall pretty quiet in terms of the reefer front, but over here on the West Coast, Ontario market starting to really pick up in terms of outbound tender rejections on the reefer side. Up here in the Midwest, still pretty disrupted around North Dakota, Minneapolis, and then over here in the Northeast, we still have a few pockets of disruption across the upper parts of the Northeast and New England market. I want to dive in to the San Francisco and Los Angeles markets. So you see right here behind me, we have outbound tender rejections for reefer going all the way up to about 6.9% in San Francisco and about 10.9% out of Southern California. What this means is anybody that's hauling reefer freight today needs to pay attention to the Southern California markets. Southern California markets typically full of produce, lots of produce shipments come out of this area. It's started to shift down into the Yuma, Arizona area in terms of lettuce production, but you still have a ton of cruciferous vegetables. That would be your broccolis, your celeries, and your cabbages, things like that are shipping out of that market that continue throughout the winter, as well as strawberries and stuff like that. So if you are a reefer carrier, pay attention to Southern California today. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hi, and thanks for tuning in for the shipper update. I'm here with our very own Seth Holm. Seth, what do you have for us today?
Thanks, Anthony. So Goldman Sachs initiated on the trucking sector last week, and good news, they like all three. They initiated on the big three trucking companies, Knight-Swift, Schneider, and Werner, and they like all three, and they broke it down for three main reasons why. Number one, we've been ordering net Class 8 truck orders at less than half of replacement rate over the course of all of 2019. That's going to set up a better capacity story in the back half of 2020. Number two, they think that the ISM manufacturing index has bottomed. You and I talked about this last week. It came in at 48.1 in November, but that's off the lows of 47.8 in September. And so they think if that bottom holds, that should be positive for fundamentals in the truckload sector moving into next year. Now also, they took a look at trucking downturns whenever the ISM is below 50, and on average over the last 3 or 4 they've lasted for 4 to 6 quarters. Right. But we're 2 to 3 quarters in now, so we're about halfway through, and they've found historically that's the best time, the very best time to buy these stocks is about halfway through. Now thirdly, they're a believer in the camp that you want to buy when fundamentals are ugly. So right now the volume picture, the profit picture, and the rate picture are all looking negative. However, valuations at the same time from an EV to EBITDA perspective and a PE perspective are trading slightly below average, which is going to leave room for valuation expansion as those fundamentals improve. Now, one last thing that they did that I thought was really interesting is they have basically a precondition condition index for how we know the truckload industry has bottomed, and all three of those have been met. Number one, net Class 8 truck orders have to be running in the low teens in terms of the thousands and less than half the replacement rate. We covered that. That has been met. Spot rates have to be decidedly negative. I'd say being down 35% earlier this year, that qualifies as decidedly negative.
Right.
And then finally, contract rates have to have gone negative, and we've seen that as well. So they think that, you know, there's a bottom in the trucking market and things are looking up from here. And that's your shipper update for today.
Awesome. Thanks, Seth, so much for those insights. And thanks so much for tuning in for the shipper update. Stay tuned for next episode.
Hi everyone, I'm Luke. I'm going to be giving you your Wednesday broker update for today. We have a lot of really interesting things. We're going to be focusing on some reefer markets today, and there's going to be some big margin opportunities to make today and potentially the rest of this week. Let's take a look. So what we have going on here behind us is the overall volume levels in the United States as of yesterday. Okay, so the blue line here in the background, that is the reefer outbound volume levels in the United States. So we saw this big dip here and then a big rise up after Thanksgiving. The orange line here is 2018 reefer levels, okay? So we saw the same pattern here when Thanksgiving hit last year, but the volumes haven't gone quite as high as they have so far this year. So that's a really good sign. So we'll see how that affects some of the markets. So the market we're gonna be taking a look at today is Memphis. All right, so this blue line here is the outbound, or the reefer outbound tender rejection percentage in Memphis, okay? So we saw this big spike here going all the way up to Thanksgiving, and then a big dip here, leveled off a little bit, and then another big dive, okay? Now, at 23.33%, we're still above the national average of 16%, okay? So it's carriers are still going to expect a little bit of a premium. However, this is a great opportunity to increase your margin as you apply a lot of downward pressure on carrier rates, okay? So do not pay the same amount that you were paying yesterday or earlier this week or even late last week, okay? Rates have gone down. The market has softened for outbound reefer rates out of Memphis. So lower your rates. It's a great opportunity to increase your margin on these loads, okay? Now, this next chart here is the volume levels in Memphis, okay, for reefers. So the green line here is the inbound, so volume, reefer volume going into Memphis, okay? The blue line is the outbound reefer volume going out of Memphis. The reason why this is so important is this tells you what capacity levels are in Memphis. So we saw basically as the green line is above the blue line, that means that there is more capacity for you to pull to cover your reefer loads. When the blue line is above the green line, that means you have less capacity to choose from to move your reefer loads. So we saw the green line dip below the blue line here. That means that capacity is tightening and that you might have a little bit of trouble covering your reefer loads. So as we see tender rejections down today and capacity potentially tightening, get your reefer loads covered today. Suppress the rates on carriers to make sure you increase your margins, because if this continues to spread and we continue to see the green line dip further and further below the blue line, you're going to see a little bit more tightening in capacity and potentially an increase in tender rejections, which will increase the amount that brokers are asking for to move your freight. I'm Luke, and that's your Wednesday broker update for today.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the freight tech revolution sounds like. Freightcast presented by Freightwaves. Subscribe now wherever you get your podcasts.
Thanks for tuning in. That's going to do it for our Wednesday edition of Freightwaves Now. We're available on all your favorite social media platforms, so be sure to check us out there. And also, we recently launched our Freightwaves TV app, so check us out on Apple TV and all your favorite streaming platforms. We're also available on Android. See you on the next episode.
Freightwaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at Freightwaves want to help. Freightwaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.